To get started, I would recommend that you get a completely free Gold IRA guide that is written by the best and most trusted Gold IRA company that I have found after over 20 years as an expert independent gold researcher. This free Gold IRA guide will explain everything you need to know and will also answer any questions you may have about gold IRAs. This is the best guide I have seen in my lifetime as an expert independent gold researcher with more than 20 years of experience, and this is the best guide available anywhere, in my opinion. Also, when you get this free Gold IRA guide, you will get free access to the top Gold IRA experts who will provide you with personalized support and help over the phone, and they will answer any questions you may have. To get this top free Gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. So again, to get this top free Gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. This free guide is really worth getting. Simply go to the link that is in the episode show notes or go to the link that is in the episode description. Also, this audiobook is not financial, investment, or tax advice. For financial investment or tax advice, consult a financial investment or tax advisor and take full responsibility for any decision you make. Okay, let's start the audiobook. Gold IRA Retirement: Protect Your Savings from Financial Risks. In an era defined by economic uncertainties, fluctuating markets, and the ever-present specter of inflation, securing one's financial future has become an increasingly complex and pressing concern. For those diligently saving for retirement, the traditional landscape of stocks, bonds, and mutual funds may no longer provide the robust safety net it once promised. The modern financial world, characterized by unprecedented levels of government debt, geopolitical instability, and the rapid devaluation of fiat currencies, demands a more resilient and diversified approach to retirement planning. This is where the concept of a Gold IRA retirement account emerges as a powerful and prudent strategy to safeguard your hard-earned savings and fortify your financial future against the myriad risks that loom on the horizon. This comprehensive audiobook delves deep into the world of Gold IRA retirements, exploring why they are not just a niche investment, but a vital component of a well-rounded retirement portfolio in today's volatile economic climate. We will unpack the intrinsic value of gold, its historical performance during times of crisis, and the mechanics of setting up and managing a Gold IRA. More importantly, we will illustrate how a Gold IRA can act as a bulwark against the erosive forces of inflation, market downturns, currency devaluation, and geopolitical upheavals, ensuring your retirement nest egg remains secure and grows over time. This isn't about chasing fleeting trends or speculative bubbles. It's about embracing a timeless, proven strategy to protect your financial future and achieve true peace of mind in your golden years. Navigating the rising tide of financial risks: why traditional retirement plans may fall short. The past few decades have witnessed a dramatic shift in the global financial landscape. The era of predictable economic growth and stable markets seems to be fading, replaced by a reality of increasing volatility, interconnected global crises, and a steady erosion of purchasing power. Relying solely on traditional retirement vehicles built for a bygone era may expose your savings to significant and potentially devastating risks. Let's examine some of the most pressing financial risks that necessitate a more robust retirement strategy. Inflation, the silent thief of purchasing power. Inflation, often described as the silent thief, is a pervasive economic force that erodes the value of your savings over time. In an inflationary environment, the cost of goods and services rises, meaning that the same amount of money buys less and less as time goes on. Traditional paper assets like cash, bonds, and even many stocks can struggle to keep pace with inflation. Bonds, especially those with fixed interest rates, lose real value as inflation outstrips their yields. Stocks, while potentially offering growth, can be volatile and may not always outpace inflation, particularly in periods of stagflation, high inflation, and low economic growth. Furthermore, government policies designed to stimulate economies can sometimes inadvertently fuel inflationary pressures, further jeopardizing the real value of your savings. Market volatility and economic downturns. Stock markets are inherently cyclical, experiencing periods of boom and bust. Economic recessions, geopolitical events, and unforeseen global crises can trigger sharp market corrections and even prolonged bear markets. For retirees and those nearing retirement, a significant market downturn can be particularly devastating. A substantial portion of their savings could be wiped out just as they need it most. While diversification across different asset classes within the stock and bond markets can mitigate some risk, these markets often exhibit correlation during economic downturns. When fear grips the market, both stocks and bonds can decline simultaneously, leaving portfolios vulnerable. Currency devaluation, the weakening dollar and global instability. Fiat currencies like the US dollar are not backed by a physical commodity, and their value is ultimately determined by government policies and market confidence. Excessive money printing, large government deficits, and loss of global reserve currency status can lead to currency devaluation. A weaker dollar reduces the purchasing power of your dollar-denominated savings, especially when considering international goods and services. Furthermore, geopolitical instability and international conflicts can trigger currency fluctuations and economic turmoil, further eroding the value of savings held in vulnerable currencies. History is replete with examples of countries experiencing hyperinflation and currency collapse, wiping out the savings of ordinary citizens. Geopolitical risks and global uncertainty. The world today is arguably more interconnected and volatile than ever before. Geopolitical tensions, trade wars, international conflicts, and unexpected global events can send shockwaves through financial markets, disrupting supply chains, triggering economic uncertainty, and impacting investment values. Traditional retirement portfolios, often heavily invested in multinational corporations and global markets, are susceptible to these geopolitical risks. Unforeseen events can rapidly destabilize markets and erode investor confidence, highlighting the need for assets that are less sensitive to geopolitical turmoil and offer a safe haven in times of crisis. Systemic financial risk and banking instability. The 2008 financial crisis served as a stark reminder of the inherent systemic risks within the modern financial system. Interconnectedness between financial institutions and complex financial instruments can create vulnerabilities that can trigger cascading failures. Banking instability, fueled by excessive risk-taking or unforeseen economic shocks, can lead to market freezes, credit crunches, and even bank runs, threatening the stability of the entire financial system and the security of individual savings. While government bailouts can sometimes mitigate the immediate fallout, they often come with the cost of increased government debt and potential future inflation. Gold, a timeless safe haven and a hedge against uncertainty. In the face of these mounting financial risks, gold emerges as a compelling and historically proven solution. Gold's unique properties and long-standing role as a store of value make it an invaluable asset for protecting retirement savings. Unlike paper currencies or digital assets, gold is a tangible, finite resource with inherent value that transcends borders, economic cycles, and geopolitical shifts. Let's delve into the key characteristics of gold that make it an exceptional tool for retirement protection. Intrinsic value and scarcity. Gold possesses intrinsic value due to its unique physical properties, its beauty, durability, and resistance to corrosion. Unlike fiat currencies, which are based on faith and government decree, gold's value is rooted in its scarcity and the enduring demand for it across cultures and throughout history. The finite supply of gold, coupled with consistent demand for jewelry, industrial applications, and investment, ensures its long-term value retention. This inherent value makes gold less susceptible to the inflationary pressures and devaluation risks that plague fiat currencies. Historical performance. During economic crises, throughout history, gold has consistently demonstrated its ability to act as a safe haven asset during times of economic turmoil. In periods of inflation, recession, market crashes, and geopolitical instability, gold has often outperformed traditional assets like stocks and bonds. Investors flock to gold during crises as a flight to safety, driving up its price and providing a valuable hedge against portfolio losses. This historical resilience makes gold a crucial component of a portfolio designed to withstand economic storms. Consider the historical performance of gold during periods of high inflation in the 1970s and during the financial crisis of 2008. In both instances, gold significantly appreciated, while other asset classes faltered. Inflation hedge, preserving purchasing power. Gold has long been recognized as a powerful inflation hedge. As the purchasing power of fiat currencies erodes due to inflation, the price of gold tends to rise in nominal terms, effectively preserving or even increasing its real value. This is because gold is a limited asset, and as the cost of goods and services increases, the demand for gold as a store of value also rises, pushing its price upward. By including gold in a retirement portfolio, investors can mitigate the erosive effects of inflation and maintain the real value of their savings over time. Diversification, benefits, and portfolio stability. Gold exhibits a low or even negative correlation with traditional assets like stocks and bonds. This means that when stock and bond markets decline, gold often moves in the opposite direction or remains stable. Including gold in a diversified retirement portfolio can significantly reduce overall portfolio volatility and enhance risk-adjusted returns. When traditional assets are underperforming, gold can act as a stabilizing force, cushioning the portfolio from sharp downturns and providing a source of positive returns during periods of market stress. Tangible asset and control. Unlike paper assets or digital investments, physical gold is a tangible asset that you can hold in your possession within the confines of a gold IRA's custodial structure. This tangible nature provides a sense of security and control that intangible assets cannot offer. In a world increasingly dominated by digital finance and intangible instruments, the tangible reality of gold offers a comforting sense of ownership and security, particularly during times of uncertainty when trust in financial institutions and digital systems may be questioned. Gold IRAs. Securing your retirement with physical gold. A gold IRA, individual retirement account, allows you to hold physical gold in the form of gold bullion coins or bars within a tax-advantaged retirement account. This powerful financial vehicle combines the time-tested security of gold with the tax benefits of traditional retirement accounts, offering a unique and compelling strategy for protecting and growing your retirement savings. Traditional IRA versus Roth IRA for gold. Just like traditional IRAs for stocks and bonds, gold IRAs can be structured as either traditional or Roth accounts. A traditional gold IRA offers tax-deductible contributions, meaning you can reduce your current taxable income by the amount you contribute. However, withdrawals in retirement are taxed as ordinary income. A Roth Gold IRA, on the other hand, offers no upfront tax deduction. However, qualified withdrawals in retirement are completely tax-free. The choice between a traditional and Roth Gold IRA depends on your current and expected future tax bracket, as well as your overall financial planning goals. Eligible gold for a gold IRA. The IRS has specific guidelines regarding the types of gold that are permissible to hold within a gold IRA. Generally, gold IRAs must hold gold bullion coins or bars that meet certain purity standards, typically 0.95 fine gold for bars and 0.9999 fine gold for coins. Commonly accepted gold products include American Gold Eagles, Canadian Gold Maple Leafs, Gold American Buffaloes, and certain gold bars from reputable mints and refiners. Collectible coins or jewelry are typically not permitted in a gold IRA. It is crucial to work with a reputable gold IRA custodian who is knowledgeable about IRS regulations and can ensure that the gold you purchase is compliant with IRA rules. Custodian and storage requirements. Gold IRAs are self-directed IRAs, meaning you have more control over investment choices than with a traditional brokerage IRA. However, you cannot physically hold the gold yourself. IRS regulations mandate that gold IRA assets must be held by a qualified custodian, such as a bank, trust company, or precious metals custodian. The custodian handles the administrative and compliance aspects of the IRA, including reporting to the IRS. Furthermore, the physical gold must be stored in an IRS-approved depository, which is a secure, insured vault specifically designed for storing precious metals. This ensures the safety and security of your gold holdings and complies with IRA regulations. Setting up and funding a gold IRA, a step-by-step guide. Choose a reputable gold IRA custodian. This is the most critical step. Research and select a custodian with a strong track record, transparent fee structure, and excellent customer service. Look for custodians who are experienced in precious metals IRAs and understand IRS regulations. Open a self-directed IRA account. Complete the necessary paperwork to establish your self-directed IRA account with the chosen custodian. This process is similar to opening any other type of IRA account. Fund your account. You can fund your gold IRA through various methods, including rollovers from existing retirement accounts, 401k, 403b, traditional IRA, Roth IRA, or through direct contributions, subject to annual IRA contribution limits. Rollovers are a tax-free way to transfer funds from existing retirement accounts into your gold IRA. Select your precious metals. Work with your custodian and a reputable precious metals dealer to select the IRS-approved gold bullion coins or bars you wish to hold in your IRA. Consider factors like premiums, storage costs, and your investment goals when making your selections. Purchase and ship gold to depository. Once you have selected your gold, the custodian will facilitate the purchase through a dealer and arrange for the secure shipment of your gold to an IRS-approved depository for storage. You will receive confirmation of your gold holdings and storage location. Ongoing management. Your custodian will provide regular account statements and handle the ongoing administration of your gold IRA. You can monitor your gold holdings and make adjustments to your investment strategy as needed. Benefits of a gold IRA: retirement, fortifying your financial future. The advantages of incorporating a gold IRA into your retirement strategy are numerous and compelling, particularly in today's risk-laden financial environment. Enhanced portfolio diversification. Gold's low correlation with traditional assets significantly enhances portfolio diversification, reducing overall risk and volatility. By allocating a portion of your retirement savings to gold, you create a more resilient portfolio that is less vulnerable to market downturns and economic shocks. Inflation protection and purchasing power preservation. As a proven inflation hedge, gold helps protect your retirement savings from the erosive effects of inflation, ensuring your purchasing power is maintained over time. This is particularly crucial in an environment where inflationary pressures are rising and the value of fiat currencies is being challenged. Safe haven asset during economic uncertainty. Gold acts as a safe haven asset during times of economic crisis, geopolitical instability, and market turmoil. Its historical performance during such periods demonstrates its ability to preserve and even increase in value when other assets are declining. This makes it an invaluable component of a retirement portfolio designed to weather financial storms. Potential for long-term growth. While gold is primarily a store of value and a hedge against risk, it also possesses the potential for long-term growth. As global demand for gold increases and supply remains limited, the price of gold is likely to appreciate over time. This growth potential can contribute to the overall growth of your retirement savings. Tangible and secure asset. Physical gold held within a gold IRA provides the security and peace of mind that comes with owning a tangible asset. It is not subject to counterparty risk or the risks associated with complex financial instruments. In a world where trust in financial institutions can be shaken, the tangible nature of gold offers a reassuring sense of security. Legacy and generational wealth transfer. Gold is a durable and timeless asset that can be passed down to future generations. Including gold in your retirement portfolio can create a lasting legacy of wealth and financial security for your heirs. Addressing common concerns and misconceptions about gold IRAs. While the benefits of gold IRAs are clear, some common concerns and misconceptions may prevent individuals from exploring this powerful retirement strategy. Let's address some of these. Fees. Associated with gold IRAs. Gold IRAs do typically involve fees, including custodian fees, storage fees, and potential transaction fees. However, these fees are often comparable to the fees associated with other types of self-directed IRAs and are a necessary cost for the security and compliance provided by the custodian and depository. It is crucial to compare fee structures across different custodians and choose one with transparent and reasonable fees. Furthermore, the potential benefits of protecting your retirement savings from significant financial risks often outweigh the modest fees associated with a gold IRA. Storage costs. Storing physical gold securely in an IRS-approved depository does incur storage costs. However, these costs are typically a small percentage of the value of your gold holdings and are essential for ensuring the safety and IRS compliance of your gold IRA. Consider storage fees as an insurance premium for the security of your precious metals. Liquidity concerns. Some argue that gold is less liquid than stocks or bonds. While it is true that selling physical gold requires a slightly different process than selling publicly traded securities, reputable gold IRA custodians and dealers provide straightforward mechanisms for selling your gold and accessing your funds when needed. Liquidity is rarely an issue for long-term retirement investments, and the enhanced security and risk mitigation offered by gold often outweigh any minor liquidity considerations. Gold is a non-yielding asset. It is often stated that gold does not generate income like stocks or bonds. While physical gold itself does not pay dividends or interest, its value appreciation over time can provide significant returns, particularly during periods of inflation and economic uncertainty. Furthermore, the primary purpose of including gold in a retirement portfolio is not income generation, but rather capital preservation and risk mitigation. Gold acts as a defensive asset, protecting your savings during market downturns and inflationary periods, while other assets can provide the growth component of your portfolio. Conclusion: in a world increasingly characterized by financial instability and economic uncertainty, protecting your retirement savings is paramount. Relying solely on traditional paper assets may leave your nest egg vulnerable to inflation, market volatility, currency devaluation, and geopolitical risks. A gold IRA retirement account offers a powerful and time-tested solution. By strategically allocating a portion of your retirement savings to physical gold, you can fortify your portfolio, mitigate risks, and secure your financial future. Gold's intrinsic value, historical performance, inflation hedging capabilities, and diversification benefits make it an invaluable asset for retirement protection. While gold IRAs do require careful planning and due diligence, the long-term security and peace of mind they provide are well worth the effort. Take proactive steps to safeguard your golden years. Explore the potential of a gold IRA and take control of your financial destiny in an uncertain world. By embracing the timeless appeal of gold, you can build a more resilient retirement portfolio and ensure your hard-earned savings are protected for generations to come. Also, I would recommend that you get a completely free gold IRA guide that is written by the best and most trusted gold IRA company that I have found after over 20 years as an expert independent gold researcher. This free gold IRA guide will explain everything you need to know and will also answer any questions you may have about gold IRAs. This is the best guide I have seen in my lifetime as an expert independent gold researcher with more than 20 years of experience, and this is the best guide available anywhere in my opinion. Also, when you get this free gold IRA guide, you will get free access to the top gold IRA experts who will provide you with personalized support and help over the phone, and they will answer any questions you may have. To get this top free gold IRA guide, simply go to the link that is in the episode show notes, or go to the link that is in the episode description. So again, to get this top free gold IRA guide, simply go to the link that is in the episode show notes, or go to the link that is in the episode description. This free guide is really worth getting. Simply go to the link that is in the episode show notes, or go to the link that is in the episode description. Also, this audiobook is not financial, investment, or tax advice. For financial, investment, or tax advice, consult a financial, investment, or tax advisor and take full responsibility for any decision you make. This is the end of this audiobook. I hope you enjoyed this and found it valuable. I would really appreciate it if you could please share this with everyone you know. All the best to you.